Hello, everyone. It's Ted Bauman here, editor of Big Picture, Big Profits and of the Bauman Letter. Well, today, I'm obviously not in my office in Atlanta, nor am I in my office in Cape Town. Behind me are the plains of Africa, specifically the plains around the little town of Albertinia. And behind me in the far distance, you can see the Outeniqua Mountains. These are ancient mountains that have been host to a wide variety of African wildlife for many, many years. And I'm on a game farm that people have recently restocked with some of the wild animals that were originally here. Well, I'm not here to talk about safaris, but I did want to make today's topic really about an old African proverb, one of my favorite ones, and that is that when elephants fight, ants suffer. And what that means, I think, is that when the big picture issues, things like the role of the Federal Reserve, the role of the federal government in its stimulus response to COVID, when all those things are going on, we see a lot of angst in the press around whether or not these were appropriate responses, how they've been mismanaged, how they have caused inflation, and so on and so forth. At the end of the day, what matters is what happens to your portfolio. And if you're like me, your portfolio is suffering. Now, I know a lot of people right now are feeling very nervous about the prospects for a recession. And I'm personally of the belief that a recession is more than likely, more than 50%. In fact, if you look at some of the preliminary numbers from the second quarter of this year, it's clear that the United States is most likely going to be announced or it's going to be announced that the United States was in a recession during the first half of 2022, because a recession is customarily defined as 2 consecutive quarters of GDP decline. Now, one of the interesting things, though, is that so a couple of people have pointed out that you can have nominal GDP growth that's positive and at the same, but have negative GDP real growth, and that's because of inflation. So if prices are rising faster than actual output, it looks like the economy is still growing, but in fact, it's not, because when you control for inflation, when you discount the numbers for your base inflation rate and all that kind of stuff, you can find that the economy is slowing. It's kind of hard to imagine a slowing economy with inflation the way things are going. But remember, a lot of the growth in the economy that we've seen over the last couple of quarters, well, really over the last 8 quarters, has come precisely, number one, from the low baseline effects of having shut down the economy during the first half of 2020, and the recovery from that, which creates above normal growth, which then means that the subsequent year's growth is going to appear below that previous year and make everybody feel bad. Even though in reality, nobody should be surprised about that. You get abnormal growth when the economy has been smashed the way it was during the COVID crisis. On the other hand, a lot of people are also saying that eventually the money's going to run out. All that stimulus money that people were using to pay for all the Peloton bikes and all that kind of stuff that was flooding into people's houses over the years, late 2020 through 2021, all that's ending. But what's interesting to me is a lot of people have not really realized that a lot of that stimulus money actually has already been spent. It's a mythology, I think, that most of that stimulus money went into things like the stock market and so on. A lot of people paid just to keep up with their rent. They paid to keep up with their mortgages. They paid to compensate for the fact that they weren't working when their businesses were shut down and so on and so forth. So the notion that that money is causing inflation, I think, is a bit of a misnomer. Nevertheless, the important thing is that because inflation is high and because the Federal Reserve has decided that it's going to focus on that rather than anything else really for the remainder of this year and probably into next, everybody has panicked and the stock market is selling off. Now, one of the things that I've been arguing for quite a long time now, really going back into the second quarter of 2021, is that the way to cope with that is to buy strong companies with moats around them, who have market control, who have market pricing, who can raise their prices along with the rise in their input costs in order to preserve their margins and sustain their earnings. And those companies will do better for you than most others. One reason for that, of course, is because they typically pay dividends, those kinds of companies. They tend to be in consumer staples industries. things that people can't do without, and they often pay dividends. So you're going to get that. But on the other hand, eventually people realize, hey, those companies are the only game in town, and money comes flooding back to them. So what you tend to see is that the performance of value stocks begins to rise vis-a-vis growth stocks. And that's precisely what we're starting to see. Because I'm out here in the middle of the bundus, as we call them in Africa, I don't have a chart to show you, but essentially that is what we're starting to see. We're starting to see value companies rising rapidly relative to growth companies. Now we get these periodic attempts at recovery by growth companies as people begin to, suspect that the Fed may slow down. It's what they call bad news is good news. In the sense that if the economy is slowing, there's a possibility that the Fed may slow down its interest rate hikes, and that would then be good for growth stocks. Don't believe that, folks. I really don't think that anybody seriously believes that we're going to return to the kind of performance that we saw, particularly during the COVID phase. Looking back in retrospect, it's clear that that was an absolute aberration in the stock market. If your expectations of the stock market were formed by the performance of your portfolio during that period, and you're going to be disappointed. Now, of course, many of us succumb to fear of missing out. I did myself. I made some recommendations in the Bauman Letter that I believed would generate pretty significant short-term gains, and a lot of them did. And a lot of those companies have subsequently fallen back below our entry price. But at the long term, if they're good companies, they're going to bounce back. But people get tired of hearing that, don't they? And that's why I think it's so important to remember that African proverb. The Fed is an elephant. The Biden administration is an elephant. The Republicans in Congress, they're an elephant. Boris Johnson in the UK is an elephant. And all of these guys are fighting battles that really are about institutions and about power. And we're the ones who suffer. And the stock market is determined by much more by those kinds of things than a lot of people realize. And I think it's critically important to remember that you're the one who's got the choice to stick it out and to last through that and not succumb to the despair and the difficulties of trying to maintain a portfolio and trying to maintain faith with your portfolio during very bad times. If it helps, cock your nose up at those elephants and say, hey guys, why don't you stop fighting and stop trying to find solutions? Okay? Why don't you find ways to have sustainable growth in our economy? Let's find ways to solve our energy problems that don't involve cutting our nose off to spite our face by abandoning fossil fuels prematurely before we have something to replace them. Make those policies, implement those policies. That's not happening. And it's not happening because those elephants prefer to fight as opposed to making the solutions. But if you're a smart ant, you'll get out of the way while that fight's happening. Preserve your nest egg and come back when things finally begin to reset and we begin to see an uptick in the market again. And I'm sure that's going to be happening sooner than you think. Anyway, this is Ted Bauman signing off from the deepest of Southern Africa, and I'll talk to you again next week.